This strategy is one of the best strategies that you can come across if you are struggling with your trading. And this strategy guarantees a high level of profitability. It is simple and it is proven. All you need to do is to follow every step that I'll be sharing with you in this video. Apply the same steps, and by first of all backtesting it on your demo account before applying it to your live account will boost your confidence as a trader, and eventually you end up being a profitable trader. So this is a simple strategy, and I'll be using just a few indicators. The first is the 200 simple moving average indicator, and this simple moving average indicator is the black moving average you are seeing. The goal of this indicator is just simply to help you to identify the trend of the market, so you don't get struggling with what the trend of the market is. So when price is consistent below this indicator, it is taken that we are in a downtrend, and when it is consistent above it, it is an uptrend. The second indicator is our zigzag indicator, which is this you are seeing. This zigzag indicator helps us to identify the main structural point, our point of price reactions. So, and this is what this indicator help us to do. So instead of you struggling with identifying this point of reactions, this indicator will help you to identify some, so you will now have a little of it to filter out of it. So having said and established that, we have our indicator window, which is right here, and we just have our RSI period 14, and then our commodity channel index, and the period is 14 as well. So the goal of this commodity channel index is to help us to identify divergence. Okay, we are going to use that to identify divergence, and as well as to time our entry. But however, the disclaimer to this and what you must avoid is we are not using any of this indicator to trade any overbought or oversold zone. So let me take you through the settings of these indicators. Let's begin with our moving average. As you can see, the period is 200. You can see the method is simple, and that is just all about it. It's a very simple setting. And then these are zigzag indicator. Period is 5, deviation is 5, back step is 3, and of course this is all it is. So just click on it. It's the default setting of the indicator. Then we have our moving average. The period is 14. You apply to close. So here are the levels: 20, 80, 90, 10. The only thing you are changing is the level and the color. We don't want the indicator to show, so you change this. My background is white, I change this to white. If your background is black, kindly change the color to black. And here is our commodity channel index. The period is 14. This is the default setting of the commodity channel index. So if you have done that correctly, your trade will be looking exactly like mine. So when we begin, remember, the trend is always our friend. So we begin by identifying the dominant trend of the market. So going through this, price is below the 200 simple moving average, so we are in a downtrend. And as you can see, this is our downtrend scenario, and price is pushing down. Let's look at our 4-hour time frame and see exactly what is happening there. So you can see the same scenario on our 4-hour time frame. So we can now go in and mark our point of interest. So here is a point of reaction. As you can see, price left this zone, and since then price has been pushing to the downside. Again, here we have this smart money cube in position here. So far this is what we have on a 4-hour time frame. So you can see that price is here. So we mark our zone on our 1-hour time frame. So we had this zone here, price reaction here, and we had this price reaction here. So by this we can choose to ignore this now. So we had this price reaction at this point. So now that we have marked this on our 1 hour time frame, we'll move to our 50-minute time frame where we are expecting to make our trade entry. So this is our 50-minute time frame. So what do we want to see? 50-minute time frame, we are no longer concerned about the position of the simple moving average 200. So what do we want to see? We want to see price pull from here. If price should pull from here and come into this zone and give us a bearish candle confirmation, we will sell to the downside. And if it happens here and give us a divergence, we will still sell to the downside. But before then, look at what happened here. Price came here, we have this bearish candle. You can include your trend line. As price is going up, you can just simply connect your trend line. Let's do that together. As an instance, connect your trend line this way. So you can see that as price close below your trend line, you have your entry here. So this is your sell entry, and you see price that pull down to that zone, okay? Or you use your candle formation straight up and you'll be in that entry. Then the factor to consider is your CCI line crosses below the 80 zone to the downside. You see it crossing to the downside, the commodity channel index line, and that is all the confirmation you need. If price violates this, it will come to this zone and they will look forward to sell to the downside. This is very much simple. It is very much effective. Your goal is for you to go back to your chart and back test how this works. This works so well and it is always working. Let's look at this for instance. Price is above the moving average 200, so we are in what? We are in an uptrend, and you can see, let's use this scenario for illustration. And then price left. So let's go to our 50-minute time frame. I will see how we would have had our entry if we were there when that particular incident happened. So 50-minute time frame, beautiful. So you can see how price moved from that zone. You are patient enough, your CCI now cross above this zone, above the level of 20. Okay, you can wait for price to break out this way. Here you see your buy trade and you see how price was consistent to the upside. This is applicable across all pairs. So let's look at gold and see how this can be applied on gold. Alright, let's go to 1 hour and see how exactly we are doing on the gold. So here is 1 hour. You can see that the gold is pushing heavily. So this is a bullish push to the upside and it is in a strong trend. Let's look at our 50-minute time frame and you can see that movement. Look at this price pull down here, and as it crosses up, you would have been in this buy trade. For a continuation in an uptrend such as this, price can only pull back to, it will not get to this 20 level, but it will pull back and closes above 50. It will come from below and close above 50. Like here now, that is your entry. It will close above 50, that is your entry. Here, see another one here. To close above 50, that is your entry. So that is exactly how you can take advantage of this strategy. Look at here, it closed above 50, that is your entry. That is because this is a strong momentum trade. Thank you for watching, and do not forget to like, share, subscribe, turn on your notification bell so you'll be the first to get notified when we upload our next video. Thank you and see you in the subsequent video.